Do you guys remember when Bank of America recently closed their stock loan hedge account and then following that up ended up reopening it? That exact hedge account was created by Merrill Lynch first, right after the 2008 financial crisis. But yesterday I also posted this on the YouTube community tab. Bank of America has just alerted its customers that deposits are delayed due to a problem impacting multiple banks. The problem seems to be related to the automated clearinghouse. The multiple banks included Wells Fargo, JP Morgan, and others having problems and delays with their deposits and withdrawals. And we have a brand new press release just dropped November 3rd, US to lower barriers on imposing too big to fail label on firms. Regulators voted Friday to undo rollbacks after the Trump administration that made it tougher to place certain financial companies under heightened supervision if they pose stability risk. The decision came at a meeting of the Financial Stability Oversight Council, FSOC, a body created in the wake of the 2008 financial crisis. In quotes, recent stress in some financial sectors arising from the onset of the pandemic and the sudden failures of some regional banks underscore the continuing need to remain vigilant to threats. This means that companies would be subject to heightened government supervision. Finally, earlier rules called for FSOC to undergo steps like a cost-benefit analysis and assess a company's likelihood of material financial distress before considering the firm for designation. What is material financial stress? This, number one, means that the bank has incurred or is likely to incur losses that will deplete all or sustainably all of its capital, and there is no reasonable prospect for the bank to avoid such depletion. Or number two, the assets of the bank are likely to be less than its obligations to creditors. Well, Citizens Bank in Sac City just failed. Friday, November 3rd, Citizens Bank was closed by the Iowa Division of Banking. Federal Deposit Insurance Corporation, FDIC, was named receiver. No advance notice is given to the public when a financial institution is closed. The FDIC has just taken over as the receiver, and remember, this is just the beginning, and what's scary is no notice will be given to you when a financial institution gets closed. Now, this is just the start. Bank of America, Wells Fargo, JP Morgan, more regulation, no heads up, government taking control, and JP Morgan also has quietly revealed tens of billions of dollars in losses on securities according to a new report on the company's overall balance sheet. Plus, the Royal Bank of Canada was just charged by the SEC that it violated the books and records and internal accounting control provisions of the securities laws relating to its accounting for its cost of internally developed software, which is bang, a $6 million penalty. We're not going to cover how small that penalty is, but point being, banks are being targeted and banks are going under. Finally, Swiss authorities and banks, including UBS, are in talks about new measures to prevent bank runs. It may be time to get your money out of these banks. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Hopefully you guys are enjoying your weekend. Happy Saturday. We got today and tomorrow, and then next week we got to make some money, especially for the people in Discord, but also the YouTube family. A lot of stuff is happening with banks, but right now, after this intro, I want to cover AMC's chart because we have earnings this week and what I expect to come. All I ask you guys to do is hit the like button. It's free. It helps me out. Also hit that subscribe button, turn post notifications on, and engage the video in any way possible. Now, this looks extremely complicated. All I did was basically map out previous earnings of AMC to try and spot patterns, or A, a green cycle, or B, a red cycle, to see, is there a pattern here? What is it going to be? Do you grab calls? Do you grab puts coming into this earnings? And what I found was right now, there's not a pattern, at least that's safe enough to play. However, you know what we've been tracking with January to now on AMC, and it's trading exactly to a T with where we are at. I also took the earning from January, flipped it, shrunk it, and it maps out very similarly to what we have with AMC. If I grow it, you will see how it maps out in particular. Scaling up right here, getting that dump, finding a bottom, getting this slight pop, which we just saw, and then these hammer candles for a long time against the trend line, which we have been seeing, and we are slowly getting a breakout, right? That slow breakout. It's an inverse cycle, and I think we are in that point of interest. With that being said, based off a technical perspective and a fundamental perspective, I'd say AMC is going to get a nasty pop, especially with market conditions. All three of those line up. However, there could be one thing that debunks all of that, sadly. It's not this. This is just to show you why the fundamental aspect may be good as well. AMC debt to income ratio, you can see right here, it had a slump for COVID for its income and its debt rise. Now its debt is falling and its income is all the way back up here. So with that being said, debt to income ratio is about to even out, and then income is potentially about to pass the debt, which is a very negative thing for short sellers and a very positive thing for shareholders and AMC as a company. But let's talk about one thing that could debunk a rip on earnings. Cinemark just reported earnings, and they had a massive beat. They broke some previous records for the company's earnings, and you have a red close, down 2.43%. You really can't make this up. Same with IMAX. Also beat earnings, I believe. And this is what you have. You have a lot of volume and you have a red close on the day, a rejection on this trend line, showing that it has potential to push back into a downtrend unless it holds this level at $16.20. Overall, AMC, all the setup is there. If it has good fundamentals, you may even see a red close, which is a scary thing to say. However, the point of interest, all that good stuff, has more reason for it to rip. But I do want to let you know one thing. The safest way to play this, in my opinion, not financial advice, I'm not a financial advisor, is if you take a look at every single cycle, you do have a rip, it comes up, it peaks, and then it sells off hard. Almost every single time. So the safer way would, okay, if it's not squeezing and you're seeing some barcoding and you're not seeing a lot of volume, not seeing a lot of gamma, FOMO, etc., and it comes up and it hits a big sell wall, large resistance for about a day or two, that could be the time to play it down. That would be the safer way to do it. I don't know if I'm playing it yet. Once I find out, I will let you know in Discord. There's 3 million shares available to borrow before we start the week. 26,000 calls expired in the money this week. Gamma slowly has been building over the past few weeks. Little bit of contracts here and there. It all depends if retail does exercise them, of course. Also, we knew this was going to happen. This is what I wanted to see reported, and yeah, they loaded up on short exempts once again on AMC. As soon as the price starts scaling up, they're dumping a ton of short exempts on it. Now, GameStop. I want to talk about this because this is someone's technical analysis on Twitter, which brings up a valid point. This same exact bottom turnaround scenario is happening on GameStop, and it could be scary for anyone holding puts. I have recently said if GameStop breaks over $14.60, everything is invalidated. If it breaks over $14.60, I would be worried. I would likely close my puts on GameStop, and honestly, I think this would play out. Do I think this is going to happen? I am still sticking to my guns that it's not, but looking at this, I could very well be wrong. Just to put that out there. Just be careful with GameStop, and let me know if you're trading it in the comments down below. Finally, short sellers who made a fortune during a third quarter stock market dive are starting to close those bets against the market as the seasonally strong months for equities arrive. Before we touch on what's happening with the S&P 500, weird bets being made and where I think it's going to go, make sure to pop in the Discord. The link is right under the video. I'm in there on the daily. We talk stocks all day long. You can request videos. We post gains, post losses, and have options trading alerts in there. And we're starting a trading challenge, which no other influencer has done, where you can copy my trades with a click of a button. And one thing to fully sell you on this point, it's $2. No other Discord, no other finance YouTuber is charging $2 for a Discord. They're charging 30 or 40 or at least 20. So get in the Discord. The link is right under the video, as well as the Moomoo link if you guys want up to 16 free stocks. It's a lot, right? Each valued up to $2,000 per stock for doing nothing. All you have to do is use my link, sign up for Moomoo, and once you open an account and make a deposit of even $1, you will start earning benefits from there. Plus, it's a great platform to use, and you get a ton of other benefits besides free money. Go do that. You never know what you can turn that free money into. Both of those links are right under the video in the top of the description and pinned in the top of comments. Breaking news, Senator Thomas Carper once again has shorted the U.S. economy. He has done so 4 other times, all profitably. He also just sold his ultra short PSQ for a 6% gain. He just disclosed buying $45,000 in HDGE back in October while the S&P 500 fell. This could be dangerous, right? This guy has a good track record. He's going short the US economy. Plus, the developer set to convert the area surrounding Google's San Francisco headquarters into a 15,000 house residential campus, complete with office space and hotels, has backed out of the project, citing current market conditions. With both of those warnings in play, let's talk about the S&P 500. Sitting at 439.69, up 0.91% on the day as of Friday, has just gotten rip after rip after gap up after gap up. We came very close to the level that I wanted, right around 437 on the S&P 500 to hit that supply zone. We came very, very close. We didn't actually get to it, which kind of scares me. I think we may see a flash up early Monday before coming back down and starting that retracement. Again, like I said, I was looking for a re-entry between 425 and 418. I thought the SPY was going to retrace to that. I do still think that is a possible scenario. I grabbed puts on Friday just to potentially get that played down. 4-day outputs, very risky. Didn't bet a ton of money on it, but I do think the SPY does need a retracement at least at some point this week. So just watch for that. I'm not betting calls until I see a retracement. And if we don't see a retracement, then I miss out on some money. It's better than losing money. Okay, I'm waiting for that retracement on the S&P 500. What do you guys think about those warnings in place? What do you think about AMC earnings? Are you playing it? Most importantly, get in the Discord so you know my trades as soon as I take them, and we can talk back and forth about certain things that you see in the video, etc., etc. And there's just the most amazing people in there. Overall, guys, that is what I got for you for today's video. Enjoy your weekend. Hopefully you enjoyed watching or found value out of the video. Hit the like button on your way out. Check the links. I love you all. Lottery Stocks out.